Welcome to the Leadership and Insurance Podcast. I'm your host, Dan Briselden. Today, I'm joined by Stan Smith, CEO and founder of Gradient AI. Stan, welcome to the podcast. How you doing?
Great, Dan. Great to be here. Appreciate you having me on.
Likewise. Thank you. Thank you so much for joining. For those listeners out there who listen to us regularly, you may well be aware of who Gradient AI are. They've got an incredible brand and an incredible story that's sort of unfolding in the market. But for those who don't know, Stan, if you could just introduce yourself and tell us a bit more about your background and how Gradient AI came to be.
Sure, Dan. My background is startups. This is my sixth startup. I didn't start them all, but I've enjoyed the idea of new ideas, innovation, fast-moving companies, delivering great value and having exciting results as a result of that, a couple IPOs along the way. One of the things about three companies ago, learned about this machine learning thing before it was cool enough to be called AI, but understanding that the math could discover very accurately, patterns in data. So I started a supply chain related company that was using machine learning. It's a very powerful technology, and it was powerful back then, and it's just gotten more and more powerful as we're all seeing around us these days. But
Yeah.
that led me to looking at a market called insurance and trying to figure out how to get in there, which led me to Milliman. You want me to go on with the Milliman story as
Yeah, we'd
well?
love to know a bit more about
Great.
Milliman, just how you sort of pivoted, how that came about, and how you pivoted into
Well,
Gradient full
so
time.
the conversation started with Milliman was going to buy a venture-backed AI software company, because one of the biggest competitors had just bought a software company, and they thought they should do the same thing. And I came in to answer some questions of the folks that were looking at the deal, and they decided that that didn't make sense for them. And they asked me if I'd join Milliman to start an AI business. My first response was no, thank you. I'm one of those startup guys. This is a big company. I don't do big companies. And they said, well, actually, our business model is more like a franchise model, which is you can start your own franchise of Milliman, and it's sort of wholly owned by you, and you do your own thing. And all the other franchises, they keep their money, you keep yours. You keep your losses if you have them, you pay them off, or you go out of business, and they don't, nobody covers anybody else's business. And I was like, that sounds like a startup again. And they said exactly. So I joined Milliman to build an AI business, a software as a service, AI powered insurance related business. And so and the advantage of joining Milliman, data is very, very key for AI. I think everybody knows that. In the insurance space, all those companies are very, very protective of their data, whether it's underwriting data, claims data. They don't want anybody to know about it, what it is, how they price policies, how they manage claims. And as a guy trying to figure out a way to get data to use to build models in insurance, I thought Milliman's blue chip brand would allow me to, build trust with companies to provide me their data, and it did. So it was that that part that part of the thesis was turned out to be very true. Those companies that trusted Milliman for years, they still trust Milliman, and an actuary can't do your work unless you give them your information, your data, and so that trust was established at Milliman, and I was able to make make a lot of progress because of that trust. So that really helped me get this business started.
Yeah, and I can imagine, as you said, that the Milliman brand enabling you to have that trust to go in and probably do a lot of discovery, a lot of fact finding, a lot
Yep.
of interaction with customers and carriers to understand what their core pain points are. Which is kind of, I was curious to understand a bit more about what led to the specifics of what you were building at Gradient. I know there's lots of people in the market trying to look at transforming or disrupting the core system space, but you've gone into sort of like a best in breed decisioning platform. Can you tell us a bit more about why you made the choice to go into that space specifically?
Yeah, so to me, I'm looking for business problems, and the business problems that I saw in insurance were, yeah, the core system is a challenging area. There's Guidewire and others in the P&C space that dominate, but it's big, it's heavy software. I've been in those kinds of markets before. There's good things and bad things about it, and just from my perspective, I find that to be kind of heavy kind of business, and that wasn't something that attracted me. But I also saw a big need outside of that area in the insurance companies, which is they're just simply put, they're data rich, knowledge poor. They have a lot of siloed information so that they can't see, in some cases, a full policy set of data in one time, which sometimes sounds hard to believe, but I've seen it firsthand with customers. And or can they manage claims effectively, or can they bring the claims data back into the underwriting front end effectively? It's just there was a lot of challenges, and I as somebody looking for those kind of problems, I saw it everywhere. So to me, it just drew me towards that part, that sort of higher level than core system. It's sort of underwriting workflow. Some people call them underwriting workbenches. There's a layer above the core systems where they can move quickly and in a repeated managed fashion. And we found, to me, it was plugging into that workflow, which was the best and fastest way into the insurance space to add the most value that I could.
Yeah, it's an incredibly fast growing area of the insurtech space, isn't it?
Yep.
I'd love to know a bit more about how the gradient product slots into that underwriter's day-to-day workflow and how it kind of makes their life easier, essentially.
So it's what's fascinating about insurance to me is that the business that comes to these carriers comes typically through a third party called a broker or an agent that has a relationship with that insured. So the insurance companies kind of working with the third party to get to their primary customer. So they are given a set of information that is typically given to all their competition at the same time. So they're trying to then make kind of two decisions. One, should I look at this and quote it? Because if it's not something I want to write, I don't want to spend the time on it. And then if I quote it, how should I price it based on the risk characteristics? And so, we see opportunities to help them in both those cases where we can actually help them with kind of a quick pass, green, red. This is not a piece of business that's going to fit your risk appetite, or it is. And so move it along because we have clients that only of the quotes they send out, they only bind or win about 2.5%. Some are as high as 15 to 20, but there's a lot in between. And so they have to do a lot of work to quote each one of these submissions. And if we can help them quote fewer but win more, we think that could help. But it's really inserting a risk score at the right time in that underwriting process where they have other information from the business, size of business, type of business, number of people in healthcare. We get a census file on the individual for the insurance so we can go find the identified data to help support the risk assessment for that group, but do it in almost real time so that they can move these quotes through quickly because time is one of the enemies they have. If a group comes through a broker and gets sent to a number of markets, which are basically insurance carriers, sometimes the first one back can win the business. And so it's not just about making the right decision on your side; it's do it in a timely fashion so that you have an opportunity to win that quote.
Yeah, absolutely. Time is money, as I say. So it's
Yep.
about like keeping
Yep.
the speed, keeping the pace. And where have you seen that ROI? Because you've obviously got a huge customer base now, but as the company's grown, where have you seen, I suppose, having implemented that and now seeing the kind
Yep.
of fruits of those implementations, where have you seen the biggest ROI for your customers?
So we measure it in what's called on the healthcare side MLR,
Right.
medical loss ratio, and that's a very direct measurement of if we identify the risks appropriately and accurately, and they price it per that accurate assessment. We're seeing our clients have steady improving MLRs so that they have a nice healthy business making decent margin and profitability for them. And so that's really it. And if it's a small book, the ROI will be in the single digit millions typically, but in large books, it can be tens of millions of dollars for ROI per year. So
Yeah.
I've been I think to me, the one thing I want more than anything else is to see a strong return on the investment from my clients. I want to know that I've added more value to them than I extracted from them. So I want to be, if I can, in double digit ROI. And we've got a lot of situations where it's 10x plus, which gives me, it makes me feel good about it. I like if it's better, it's better. But I mean, some serious large impacts and on a recurring basis. So
Yeah.
it's really it's the reason I started the business, and it's really gets me excited every day to come to work to do more of that.
Yeah, absolutely. I mean, as you said, there's so much opportunity to really add clear ROI to people, and you've clearly got a
Yep.
great product that does that. There's a lot of skepticism around AI in underwriting. I know that we're kind of moving towards that curve of adoption, but could you maybe speak to a little bit more about model accuracy in general, but then more specifically gradient models?
I think the black box it has been the term many have used for a long time. I think actuarial math that has really dominated insurance is more about knowing what math was used than actually trying to get an accurate outcome. So it's been
Mm.
about transparency. So the regulator could see that you use the proper method to project your losses so that I can sign off on your loss projections and things like that. There were reasons for this. But when you get into other things like pricing risks or estimating the duration and or complexity of a claim, some of that math, that's not the best math for those different applications. And so that's where
Mhm.
AI starts to come in. I think there's a real big term in insurance called credibility, where the actuaries always want to have historical information so they can project it forward. Again, that's rational, it's valid. AI comes into play in a lot of cases in small insurance policies, small business policies. We've got young companies that don't have any history or have limited history. Um, they may be in a class of business that's got some risk, and so but they've never had a loss. So how do you price a business that has no experience, if you will, but also there's millions of them, and you'd probably like to write a lot of premium if you know how to do that. And so it's a place that we have really done a lot is small business insurance, whether it's small group like under 200 lives in healthcare, or actually small commercial in the P&C space, where if you look at 100 companies, only one or two out of that 100 are going to have a loss. But how do you price for the majority not having a loss, but absorbing those two losses? AI is kind of a really powerful way to do that, and to observe characteristics of companies that will have more losses than others, and understand that, as opposed to have to see direct losses by that insured. So there's just the inference area of AI is really powerful. And
Yeah.
when people ask about accuracy, you can back test it to know how accurate the models are. You can look at a model and say, okay, I'm going to run it, a year ago in time, and you can back up the data so that's done accurately, just as if it was in production, and then you can
Mhm.
test how it actually performed. There's also, on a go-forward basis, we've had clients that have done A/B testing. They've actually put a series of claims, for example, they've kept it out of our models and not run through the models and not managed with the data from the models to give
Mhm.
them a real clear ROI. It's been fascinating and very rewarding. I mean, that's one of the clients that had a 10x or greater ROI on what they spent with us, because they got to measure it. Their own internal data science team did the measuring, not us. It was very satisfied to see that kind of impact.
Yeah, it's really interesting. But what about the governance then? Because there obviously have been lots of events where there's
Yeah.
hallucinations, there's things that can possibly go wrong in the back end. Is there anything that it has to be in place specifically to stop models from drifting or making bad decisions? And what does that look like?
So on the you started off sort of the governance and the bias stuff. So one of the things we've done is we can do, because we've got data from a number of companies. We have a contributory business model, so we get data both in the property casualty space and the health space from multiple companies. Um, we can see across companies. We can see across companies and across geographies, and then measure by type of company profiles and other things that to measure for and test for bias. Even if it's something that that company can't see themselves because they only have their data to compare themselves against. This is an area where having sort of a contributory data set and sort of a benchmarking capability really does come into play. Um, I think what the regulators are always trying to do is prevent the somebody being disadvantaged by some sort of insight that the models or the insurance company shouldn't have, and that's fair. So I think what's been happening and will continue to happen, I think you're going to see less concern about how these models work and more concern about what data you feed them and what outcomes are you allowed to use.
Mm.
Because these things are going to have, I mean, if you just think about all the data that they keep training these models on, it's going to have more and more data about all of us. And when you think about the marketing files that most of the marketing companies have on all of us, it's incredibly accurate information. So when that data starts to flow through these models, the models get to know Dan and Stan, pretty good idea where we live, how much we make, how many people in our families, how many cars we have, all those things that are just, you'd be pretty surprised at how accurate it is. And I think the regulators just have to say, okay, that data's out there. Either you can't use it for certain applications, or you can't have these kinds of outcomes to protect people's interests. So I think that's been in place for a while, and I think it's going to stay in place. And the models will just get better and better, but the
Yeah.
regulators will sort of box them in, I think.
Yeah, nice. Okay. The subject that I'm really interested in that I hear so much about in the market is, robots stealing human jobs. So we talk a lot about this in terms of the human in the loop part. Where do you
Right.
still see humans doing things better than AI? And I guess what's the human edge at the moment that AI can't necessarily replace or automate?
Yeah. So look, you can see I've got gray hair. I've been doing this longer than you have, and probably most of the people that will listen. I've been through so many uh, uh, technology jumps where everybody said this job's going to go away. This is, it's going away. Software engineers, they were going to be out of jobs 30 years ago, or because there's greater, better language, faster compute time, all sorts of different things that was gonna hurt them. There's not enough software engineers. There still aren't enough software engineers. And I think what you're going to find is jobs are changing, and they always change when we all got different levels of technology, or our cell phones, our laptops. It changes how we do our job, but the jobs are just, they're just slightly different. And so we are hiring differently here at Gradient because AI allows us to have people do different things that they normally, for example, we would hire some junior software engineers that usually would sort of work in conjunction with one of our senior software engineers. Now they tell me it would take them more time to tell a junior software engineer what they should do than to have the AI a code assist do it for them. And the stuff they're left with uses their judgment, their experience, their knowledge, and they're actually enjoying their jobs more. So, all this, it's going to take jobs. In some cases, it's going to take the drudgery away from jobs. There's not a software engineer I've ever met that wants to do documentation of their code. Guess what? AI does it for them. I mean, there's things that make their job better. I think the more we can do that, the more we can deliver up to an adjuster, not just this claim is going to be high risk, but here's by the way, here's a care plan you should consider. Here are the milestones you should consider for this claim, for this person on this injury. So it makes them, they have judgment. They'll say, I've seen this before. I don't think that's exactly right because of something that I see or I know or I suspect, or I agree and I'm going to do that using their judgment. I think the judgment becomes more and more important as AI takes away more and more of the mundane. And I think that
True. I
I
think you're
just think
right.
that's where we're
It's
going
an
to see.
enabler, isn't it? It's an
Yeah,
enabler. Like you're actually allowing people to do more high value tasks, look into things in a bit more depth that they wouldn't necessarily used to, and actually that can have a positive impact on the customer care part of the journey as
yep,
well, which is obviously integral to
yep.
retention. So I think that's really good. Have you seen anything in terms of how I think it's easier to do when you've got companies that are starting? Like we obviously work with a lot of MGAs that are building AI native businesses and
Yep.
beginning the journey with technology at the forefront. I think the harder part is actually when you're looking at legacy, bringing people on a journey that have got very archaic processes, or people that have perhaps been in their jobs for 20 years that either maybe don't want to change or are afraid of change. What do you kind of see and hear from the customers that you talk to, and what do you see as that kind of balance that's being struck?
I think I started this business over 10 years ago. I think the openness and the acceptance and actually excitement about taking on AI now, I've never seen it before in this space. Before it
Mm.
was, what is it? I would have meetings with people, I thought were interested in my products, and no, they were just interested in learning what AI was, 10 years ago. So that was interesting, to educate people, but you had to find the few that were willing to say, hey, I want to take a jump ahead. I want to get a competitive advantage. Um, I think everybody's realizing that it's great for a lot of different things. Some of it just getting rid of busy work, and nobody wants busy work. So I think the adoption rate's pretty fast there. I think you're going to see a lot of internally built tools for workflows and things like that. Um, but I think they're also going to try and build some pretty complex things. So, but they're always going to have their data, sort of hermetically sealed behind the firewall. So that same security also prevents them from seeing a lot of things outside their four walls. So, and that's where someone like Gradient can come in to help there. But I still think it's the best time ever for being in the insurance space with AI, because I think they're now realizing it's here to stay. It's going to make a big difference, and if they don't get on board quickly, they can fall behind.
Absolutely. Well, that's another point because I think we're just seeing a bit of a domino effect across the market, aren't
Yep.
we? With people that are kind of early adopters. You've got to read all the reports that are coming out of the various different publications around where we've gone from pilot to adoption over the last 3 or 4 years. There's many more people that have had those strong use cases now. So it's table stakes in the sense that, are we moving towards a market where having AI technology and AI automation is part of the course? And if you don't, you're essentially going to fall quite far behind quite quickly.
Yep. Yep. I, I
Yeah.
I think one of the decisions these companies have to make is, even if they can make it, should they make it? Because I
Yeah.
think it's going to stop being can I or can't I? Because the answer, I think, the more these things just continue to get more and more powerful, the answer is always going to be, I probably can. So the question is, should you? Is it really as a insurance company, should you actually build, which parts of your IT stack should you build and maintain and own versus not. And I see it all across the board. There's a lot of companies we work with that have homegrown core systems. They built it themselves. They're always going to want to build it themselves. That's the way they think. They think it's a differentiation for them. And you go down the street to a company they compete with head to head, and they buy third-party software off the shelf, and they think that's a advantage there, and they're both convinced they're right. Um, it's there's going to be a wide array, but I think you're going to I think it still comes down to what should you build and what should you license. And by the way, here at Gradient, we don't build everything. Because it's a build or buy on everything. Stick with your core competencies, do what you should be doing and need to do, and what you can license in many cases still is a better choice in my view.
Yeah. What are you seeing? Because obviously we've got a lot of noise around, people like Anthropic making big moves in the financial
Yep.
services space. A lot more companies having that technology readily available at their fingertips.
Yep.
What are you seeing in terms of actually buy versus build, and what's working and what's not? Yes.
So I think the thing I see the most of, if I had put one category out there, is document summarization. It's gone from a pain for people to do, and everybody wondering how to kind of know what, if I'm looking at a claim, whether it's because I'm taking care of the person or there's a lawsuit or whatever, there can be thousands and thousands of pages of medical documents.
Yeah.
And typically that's handled like PDFs, and you just get, 1,000 pages. Well, in medical documentation, a large portion of that document is a repeat. So if I go see my doctor 10 times, the first visit is there when I'm there for the second visit. Those first two visits are there on the record when I go for my third visit, and so forth and so on. And so by the 10th visit, I've got multiple documents that have the same visits in copies. But those will all be a document that has to be, pulled, and I get charged per page. There's a big business in insurance around document retrieval, which is kind of interesting. It's like I didn't realize that was, but it is. It's a huge business. But then now I got 4,000 pages, and I'm trying to figure out what I'm going to do with your claim, Dan. Now what do I do? Well, I used to have to read it, or I'd send it to a low cost region for them to convert it to an outline. And now document summarization instantly. I get an outline. I get all sorts of great information, and I know what's going on. So that is probably the number one use case across the board that we've seen. Is it started with those medical documents. Now it's going into data ingestion for underwriting, and just anything that there's multiple documents where you need a good, consistent, accurate summary, and you need key insights into all those pieces of information. LMs are great at that. And then we come in downstream from that to say, okay, here's outside information, here's a risk score or a set of risk parameters or insights that you need to further that process and to make that final decision. But up front, those LMs are getting better and smarter daily. So it's incredible. And again, we're taking advantage of it here, and we're including some of those capabilities in our products as well, because why not?
Yeah, absolutely. And how do you sort of build a moat then to kind of keep ahead of the
Yep.
curve and the rising tide of AI?
So that is the key. And I think go back to the beginning of the business. When I wanted to start this business, my thought was that AI needs data, and if I just have AI, eventually everybody has AI, just the way technology works, and here we are.
Mm,
I wish I invented some of it, but I didn't. But I always thought that the data would be the key. So when I started the business, and part of the reason I joined Milliman was to build a sort of independent, trusted company that could in fact be trusted with data from multiple companies. And it was also part of the reason when I started the business to go after small companies, because they didn't have enough data on their own to compete against the big companies, big competitors. Didn't have the resources to build a lot of this stuff themselves. Didn't have the people or the funds, but they could, if given the opportunity, take advantage of greater insights at a reasonable cost. It was the right starting point for the business. And so I got a number of companies to start trusting me with their data, and sort of built that flywheel effect, and then got more and more, and then more and more bigger companies to build sort of a critical mass so that we could bring a lot of value to each new customer and all our existing customers without sharing anything sensitive, without providing anything that's not allowed. So it's been really about model training, pattern observations, about different things that go on in different places for different reasons, and just having really well trained, insightful models, and then being naturally pulled up market. So you do that from smaller companies, and the mid-sized market folks realize that you could help them too, and you start getting the mid-sized folks, and then you start getting into the large carriers, and we've got a growing number of large carriers now. It's sort of a natural progression because it turns out that a lot of those MGAs that you probably bring on your podcast are using somebody else's paper. So when we got into some of the underwriting in group health, we were helping some of these MGAs write business and have great MLRs. And the carrier paper that was they were using took notice and said, "What are you doing?" "Oh, it's gradient. Let me look at it." And guess what? Our first carrier deals were basically through those kind of warm introductions. There, we were already indirectly working with those carriers, and they could see how we performed. And it was a great sort of a couple of first deals because it was totally natural. And my board was surprised that we sold to some carriers because I sort of said to them, they take a long time to make decisions. We're not trying to do that now. And suddenly we land some carriers. And I'm saying, well, we already had our chance to show them what we could do indirectly, and so it just made it straightforward. And they're like, well, let's go do more of that. And so that's what we're doing, more of that, more
Yeah,
carriers.
so it's a really smart strategy, isn't it? You've kind of got your use case on a smaller scale, there's familiarity, you can see the work that you're doing, and then that's what I was curious about is how do you make that transition upstream, and does that layer in complexity then? So versus a sort of an M&A, an MGA project versus a large carrier, how does that sort of transpire?
Yeah, well, the MGAs tend to be very focused, as you've seen. They've got a market area, whether it's geographic or lines. You get to the carriers. One of the things that happened to us is we walked in the door in a particular line of business, and the carrier just thought, well, that's where gradient fits, and we'll just leave them there. And then we've discovered that, oh, by the way, in many of these carriers, we can help them across multiple lines. So the difference when you go upstream is it's sort of an opportunity to land and expand. So we start to we typically go to the line where they have the greatest challenges from a profitability perspective from the underwriting side, or if it's a claim opportunity to help them better manage the losses that have occurred. Um, and then typically once we help them there, we ask them, so what else is going on here? There tends to be some other things happening in the marketplace that people will bring us over to those operating units, and we start to have more conversations and start to expand horizontally as well as vertically, because
Yeah.
typically the first thing we sell to a client is new business underwriting, because that's typically all of them are trying to grow their top line profitably. But they also, the bulk of the revenue is on their existing book of business, and they go through a renewal cycle. So we actually have a growing number of really sophisticated AI solutions on the renewal side to help them understand, retention and other risks that will help them do a better job of pricing their existing book, and maintaining and maximizing the profitability across that book.
And how does it work from a product perspective? Are you constantly sort of plugged into that conversation, iterating, coming up with stuff in the background to make sure that
Yep.
your product runway is matching the needs of the clients? How does that look?
So absolutely. So and what happens is if we go into an area that's not doing as well as they'd like, and we help that, it usually it's like the domino effect. They say, okay, guess what? We have this other business line here. It's different. Here's how it's different. We need your help. Can you help us? And so we're actually expanding from the group underwriting that we've been doing for a number of years into a number of individual lines because our clients have said we have some challenges here. So Medicare Advantage, the U.S. government has shaken up that whole market segment, which so some carriers are exiting after having been very big players in that market. So there's a lot of uncertainty and a lot of volatility, and that tends to be where we shine because we can actually go to companies and say, "Hey, we can help you, get through all this and still build a profitable business." And so we're sort of being pulled to the next hot area, and they will tell us, your products don't work for this line for these reasons, and we're like, great. But if there's a reason for it to make it work, we will, and we do, and we tend to start adding those lines, and it just we're looking, 2, 3 years down the road at more business lines that we want to get into because we sort of see how this will, where this will take us.
Yeah. Are you able to speak to those lines that you're sort of seeing opportunities in? Or...
Well, so yeah, so I mean, we've been group, as I said before, and part of the reason was when we were smaller. Group is you don't deal with individuals, so you don't have some of the individual rules and regs that go on with just all sorts of things when you write individual policies for personal, auto or home or whatever. So we stayed a little bit away that just from the regulatory weight. But in the healthcare side, we see a big opportunity to go on the individual lines. So Medicare Advantage, Med Sup, and potentially other lines around ACA, possibly even going into disability and or life insurance eventually, because that's sort of a lot of our carriers have those lines as well, and that's sort of where we see them taking us is down those lines in that order, with life sort of being the last one. Excuse me.
Yeah, it's a huge opportunity in that sense. What about internationally? How does that, if you look at the kind of the product runway and the international expansion, is that something on the horizon?
It's funny. I've talked to a lot of folks that have entered the U.S. market from either on Asia or Europe, and they came to the U.S. because it was such a big market relative to where they were. I mean, Europe's overall is a big market, but each country's on the smaller than the U.S. side from the business
Yeah,
opportunities. Um, and so it's really been hard for me to say, okay, we're going to go because you don't go after Europe, you go after France or Germany or the UK. And then
yeah,
you have to build. I've done it before. I think what I've said to my board is that if we think we're going to run out of headroom growth space in the U.S., I think we should talk about it. But one other way to think about it is possibly an acquisition or merger with somebody who is European based or Asian based or some combination global. And there's a lot of those folks that are bigger outside the US than they are in the US. And so if if we're trying to build a business for like an IPO or something like that, that kind of opportunity would be something we would probably want to consider.
yeah.
Still, you don't have to be global, but I think if you want to build a category leading, clearly dominant type of company, sometimes global is required because some of our clients are global.
Yeah, as you said, like there's such a big market opportunity in the US and
Yep.
actually expanding line by line. But there's also a huge M&A opportunity with some pretty established players that are coming out of the UK market, for example. So there's
Yep.
always opportunity there to get
Yep.
boots on the ground. What do you see then? Out of curiosity, I mean, level with me. How far off are we from sort of fully automated underwriting, and where do you see the next sort of 3 to 5 years in the insurance landscape going?
Well, I think there's been fully automated underwriting for a long time, but some
Okay.
of it's very basic, like rules engine. So a
Mhm.
couple simple if-then statements where if it's X or above X and below Y, it's a yes. If it's whatever. I mean, some of that has been going on for a long time. You look at
Mm.
some of it's financially motivated, just purely if you're writing commercial policies for hundreds of dollars or a few $1,000s. Insurance companies cannot afford to have a person go in and look at each of those and review it for hours and so forth and so on. It's just there's not enough margin in it. So you just either don't write that business or you have to figure out a way to write it very efficiently. And so the question really with AI is can you do it more efficiently and more accurately? Because I think if you can, we've actually done a proof of concept with a carrier where their internal team had built a certain straight through processing volume, but when they went above that a certain percentage, their loss ratio started to get worse. And so the proof of concept was, could we get them to a higher percentage of straight through processing without having the loss ratio get worse? And it turned out we not only could get them way past the goal of the percentage they wanted to go straight through, but we actually improved their profit, their loss ratio as by the selection results we showed them with our solutions. So it kind of they were ecstatic that they could again put more business through, but actually drive better results at the same time. So drive top line growth as well as improve profitability. That's rare to put those two together. I think the insurance world has seen, when companies grow too fast, they tend to not be as selective about the risks they're taking on in many cases, not in all cases, but in many cases. So the regulators start to get nervous when someone's growing too fast because they conclude based on past behavior, they could be taking on a lot of risky business that they've underpriced, and that those losses will show up on their balance sheet in the future, and that could put that company at risk and the policyholders at risk. And so there's this behavior characteristic that everybody says, decent growth is okay and safe, but too much growth just looks risky. So we're not trying to say what somebody's growth should be, but we think if we can help them grow profitably, it unlocks a lot of opportunities for our clients.
Yeah, absolutely. Well, I mean, profitability is what we're all here for, right? So you
Yep.
mentioned the AI sort of actually breaches that chasm between profitability. How does that kind of work from your perspective about sort of bringing those sort of two things together?
I think it's interesting. AI, we sort of talked about it. You think about with underwriting, tell me how I should price this risk, but there's a lot of layers you can see about a piece of business that isn't what normally an underwriter would look at. For example, lifetime value. Can AI understand based on your company, who you are as a carrier, and the markets you serve, and the brokers you have, and so forth? Is this a client that's going to be come in for 1 year? Is it one of your types of policies that is going to remain with you for years? And maybe you should think about it differently if the lifetime value is a certain level. Again, that's not a direct loss ratio prediction. That's an insight into this type of company, type of ownership, whatever combination of things the models have learned from your book of business. that can tell you that this you might be more aggressive with your pricing, or not that aggressive because this is going to be a high turnover type policy. They're likely to come in for 1 year and leave after that. So if you don't make money in 1 year, in the year you write them, you shouldn't write them. That's kind of the interesting insights. It's not about what's the price you can write this policy profitably. It's looking at what's the value of this policy to me this year and in the future. So there's a lot of these nuances that AI brings, not just around that risk, that will make folks able to, again, automate some of that stuff. Okay, so I want to maximize profitability. I want to maximize long-term relationships. I can AI can be told maximize A over B, or evenly, or you know a lot of those kinds of things. Companies can look at how they're performing financially and tighten their underwriting rules very dynamically. Say, okay, my range has just got tighter because I'm seeing some losses in some earlier business I wrote that's been unexpected, which can happen. So I need to pull back I need to maximize profitability, for the rest of the year as opposed to maximize growth. And having that ability to dial that in has not been easy in the insurance space because they've been a little bit, sort of big ships and not that agile. But I think AI allows them to be a lot more agile about things than they've been in the past.
Absolutely. Yeah. I always like to ask this at the end of an episode, Stan. So looking back at Gradient, how you built it, if you were to go right the way back to the beginning, knowing what you know now, would there have been anything you would have done differently, a market area you'd have entered into, or something you would have done sooner, if you had the opportunity to kind of go back?
I think, it's an interesting question. I've never asked myself that. And I think my gut is I would have done everything I've done faster than I've done it and
Okay.
sooner. I think, and I don't think there's many people that have started companies that wouldn't think the same way. Sometimes it feels like it takes forever to get places you want to get to. The question is, if I had it all to do over again, I guess I'd want to get to where we are now, years ago, so I could be much further along today than I am, just because the opportunities it's still massive. It's still about out executing the competition. There's lots of new companies coming up all the time. Competition makes you better or it takes you out, one of the two. So I think I think speed is still the thing I think about mostly, just, going faster.
Yeah, absolutely. There's also the fail fast mentality as well, getting you to the no's rather than the yeses, and then learning from them as well.
100%.
So
Yeah,
yeah, brilliant. Well, look, fascinating conversation, Stan. I really appreciate coming on. Sounds like you've
absolutely.
gone on an incredible journey, and you've got an incredible background to really drive this business forward. Your passion comes across through when you talk about this industry and the challenges that you're seeing and the changes that you're making. It's evident that Gradient's doing a fantastic job and having some real success and genuinely meaningful impact in the insurance space. And I
Thank you.
really look forward to seeing what you continue to do and the continued success of Gradient. So thanks very much for joining us.
Thank you for having me, Dan. Really enjoyed it. Take
Thanks,
care.
Dan. Cheers.